Hello, I'm Lelda Smits for the Finance News Network, and joining me from Redpoint Investment Management to discuss its Global Infrastructure Fund is Head of Portfolio Management Ganesh Suntharam and Senior Portfolio Manager Alex Stephen. Ganesh, Alex, welcome to FNN.
Thank you.
Hello.
Redpoint's Global Infrastructure Fund has just become available to retail investors. Could you outline some of the benefits of investing in listed infrastructure?
So a key consideration for retail investors, as with any investor in a falling interest rate environment, is how do I maintain the purchasing power of my cash investments? For an institutional investor, they can simply answer that question by buying a toll road. But a retail investor, that's not a viable alternative. So what a retail investor would like is a single decision where they can get the GDP growth characteristics of the underlying asset class and ensure that it's globally diversified for risk reasons. That's the primary benefit that our fund provides to retail investors.
Okay, and Ganesh, what is the objective of the fund?
The fund has two primary objectives. The first objective is to capture the GDP growth characteristics of the underlying asset class. For that, we carve out revenue and say, where is the revenue for this company coming from? Does it come from core economic activities such as mobile towers, toll roads, gas pipelines? In addition to that, we ensure that the portfolio itself is diversified in terms of risk and therefore not overly concentrated in any one individual stock. The second objective of the fund is to look at quality. So what are the financials of the company? Are they healthy? Are they conservatively leveraged? Are they generating good revenues and profit margins? And the second aspect of that is the governance practices of the company good? Are they committed to good practices and therefore managing the sustainability of their assets for the longer term? Those are the two primary objectives we look for in our funds.
Right, and what benefits do you believe an investment in listed infrastructure can bring to a diversified portfolio, and should listed infrastructure also be included in both accumulation and retirement income portfolios?
Infrastructure, defined well and with a focus on quality, is an important asset allocation consideration for all investors. This is particularly the case when you have an ageing demographic pool and therefore have greater income needs for that pool. The diversification and lower volatility characteristics of the underlying asset class, as well as the GDP-linked growth characteristics of the underlying assets, are an important consideration for all asset allocators. In the retirement phase, the yield characteristics are an important consideration, and in the accumulation phase, the GDP-linked growth characteristics are an important feature of the asset class.
Thanks, Ganesh. And Alex, how does the fund identify assets, and which stock selection metrics do you use to identify which stocks to include in the portfolio?
Firstly, we define our universe. So we're interested in companies that derive more than 65% of their revenue from the core infrastructure activities that Ganesh has mentioned. This gives us a universe of around 155 companies across developed markets. And then secondly, we rank those companies based on their financial strength and their environmental and social and governance policies. This is our own proprietary methodology and is called the Redpoint rating. We use the Redpoint rating to deselect or de-weight poorer quality companies that we believe will underperform their peer group in the medium to long term. Then thirdly, we look at the level of debt that these companies are holding on their balance sheets. And we deselect or we downweight companies that we believe are excessively leveraged against their peer group. And then lastly, we tilt the portfolio towards high yielding stocks. And so the whole portfolio has a stronger dividend return. Those four steps give us a highly diversified portfolio of 100 to 110 companies, which is spread across global developed markets.
And Alex, can you offer an example of an asset you hold and explain why you've chosen to include it in the portfolio?
One of our largest weightings is in National Grid. National Grid is a British multinational electricity and gas company. It owns and operates a large majority of the electricity and gas transmission networks across the United Kingdom and a good deal of the northeast of the USA. It operates in these regions and is therefore integral to the smooth running of the economy, and as such it generates at least 65% of its revenue from core infrastructure and is classified as eligible to our portfolio. It has strong environmental and social and governance policies. It also has a strong set of financials, and therefore it rates very well on the Redpoint rating. It has a good dividend yield and is only moderately leveraged. So we're very happy to own National Grid in the portfolio.
Okay, and finally, Alex, could you outline how the fund has performed?
Yes, absolutely. The institutional fund has been running for nearly 3 years now and is up 70% over that time. That's over 20% per annum. The retail fund has been running for nearly 9 months and is a subclass of the main fund, so performs in line with that.
Thanks, Alex. And finally, Ganesh, infrastructure has been performing well over the past few years. What is your outlook for the next few years?
So global markets have recovered reasonably well since 2008. As Alex has just described in terms of our fund performance, infrastructure as a whole has performed reasonably well. Despite this, yields in this sector remain fairly priced. But when you actually compare your alternatives in terms of cash and term deposits, the yields in the infrastructure asset class continue to remain attractive.
Ganesh, Alex, thank you for the update from Redpoint Investment Management.
Thank you for having us.
Thank you.